The SOX death cross, what it means for the market. The SOX, or Philadelphia Semiconductor Index, tracks the performance of leading semiconductor companies. These chips power everything from smartphones to cars, making the sector vital to innovation. The SOX is often a crystal ball for where the U.S. stock market is heading, so when it moves, investors listen. Recently, the Semiconductor Index triggered a death cross. This technical pattern signals a potential shift in market momentum, turning heads across Wall Street. Today, we'll break down what this means for the SOX, the stock market, and your investments. Stick around because this might define 2024's market story. The term death cross sounds ominous, and for good reason. It happens when a stock or index 50-day moving average dips below its 200-day moving average. Think of it as short-term pessimism overpowering long-term optimism, a red flag for potential price drops. Since 1994, the SOX has witnessed 17 death crosses. On average, this trend results in a 5.2% drop in the index over the next month. Historically, these crossing lines have marked turbulence and uncertainty in the markets. Are we destined to relive that volatility now? At the close of 2024, the SOX saw its most recent death cross, sparking widespread concern. This movement didn't arise in isolation. It mirrors slowing demand in key chip markets and broader economic concerns like tightening monetary policy. A storm might just be brewing for the stock market. Technically, the SOX is now near a critical point, a symmetric triangle pattern. The outcome? It could either break upward or continue its slide down. This technical battle is setting up one of the most closely watched moments for semiconductor stocks and the market as a whole. Why should a single sector, semiconductors, matter so much? Chips power advanced technology, from AI systems to electric cars. A slump in semiconductor performance can disrupt growth across industries and drag the market down with it. This isn't just a sector problem, it's a global economic concern. As semiconductors hit a bearish stretch, companies in related industries might face production delays and rising costs. A bad day for the SOX often sparks ripple effects for the Nasdaq and S&P 500, meaning your portfolio might already be feeling the shocks. The SOX index is often a leading indicator for the tech sector, which dominates the U.S. market. When the SOX sneezes, the Nasdaq and market giants like Apple, Nvidia, and AMD catch a cold. History tells us that long bearish periods for semiconductors usually shadow larger market corrections. This pattern shows why the SOX's movements can't be ignored. A prolonged downturn here increases the odds of turbulence ahead for the broader stock market. Investors need to monitor these trends closely. Ignoring the SOX is like driving blindfolded through a financial storm. For investors, the death cross is a signal, but not a guarantee. While it suggests bearish momentum, it's not the sole factor to decide buy or sell actions. Combine the signal with other analyses, like fundamentals, sentiment, and economic conditions for a well-rounded approach. If you own semiconductor-heavy portfolios, this might be the time to evaluate risk. Watch out for potential overexposure to tech and diversify wisely. Taking a proactive, mixed approach could help reduce losses as the SOX works through this bearish period. Where do we go from here? Two main scenarios could unfold. First, a confirmed breakout of the symmetric triangle could spark a recovery for the SOX, bringing the sector back into bullish territory. Second, a failure to break resistance could trigger steeper losses and heighten market fears. The most probable outcome? A blend of short-term volatility and mid-term adjustments. Whether the SOX recovers or declines further, one thing is certain. Staying informed and flexible as an investor is your greatest strength. Markets test patience, and preparation wins the game. So, what's the takeaway here? The SOX's death cross is more than a chart pattern. It's a reflection of market sentiment. From tech innovation to portfolio strategy, the SOX influences it all. Whether you're a seasoned investor or a curious observer, this event deserves your attention. Now is the time to dive deeper into market signals and refine your investment approach. Subscribe for more insights on market movements and strategies to stay ahead. Don't let this technical pattern catch you off guard. Be proactive, stay informed, and make smarter financial decisions today.